Hey everyone, ready to turbocharge those retirement savings?
Always a good idea.
We're taking a deep dive into the latest from the IRS.
Oh, yeah.
All about retirement plan limits for 2025.
That's right.
It's Notice 2024-80.
Hot off the presses.
And this is your cheat sheet to make the most of it.
Exactly. Well, we should probably start by highlighting that there are some pretty significant changes for both defined benefit and defined contribution plans.
Oh, wow.
Let's start with defined benefit plans,
Okay.
which are more commonly known as traditional pensions.
Right.
The annual benefit limit for those plans is increasing
It is.
to $280,000 in 2025.
Okay, so for those with traditional pensions,
Right.
this means you could potentially get a slightly higher payout in retirement.
That's right.
Interesting to see how these plans are adapting.
Yeah, and it's important to note that this change primarily affects those with traditional pensions,
Right.
which aren't as common as they used to be.
Yeah.
Now, where things get really exciting for a lot of people is with defined contribution plans.
Okay.
You know, those 401ks,
Right.
403bs, and similar plans that many people rely on for retirement savings.
Yeah, these are the big ones.
Yeah.
So we're seeing some significant jumps here.
Yes, they are.
The overall limit for defined contribution plans increasing from $69,000 to $70,000.
In 2025.
In 2025, that's an extra $1,000.
And you can put away each year.
Yeah, what does that mean for you out there listening?
It's a fantastic opportunity to boost your savings,
It is.
especially if you've been maxing out your contributions in previous years.
Yeah,
Every little bit counts when it comes to building a secure retirement.
absolutely.
And speaking of contributions,
Yes.
the limit for elective deferrals to 401ks, including the thrift savings plan, is rising to $23,500,
Wow.
up $500 from last year.
Okay.
This applies to Section 457 plans as well,
Gotcha.
which covers state and local government employees
Right.
and tax-exempt organizations.
So important to remember.
Yeah,
These contributions are pre-tax.
that's right.
So you're effectively lowering your taxable income while saving for the future.
Exactly.
It's a double win.
It is.
And don't forget,
Yeah.
if you're 50 and over, about those catch-up contributions.
Ah, yes, those are important.
Those limits are staying the same for 2025.
All right.
That's an extra $7,500 you can contribute to most employer-sponsored plans,
Okay.
and $3,500 for simple plans.
Right.
And for those between 60 and 63,
Yeah.
there's a special catch-up contribution limit of $11,250 for certain plans.
That's right.
So no matter what your age,
Yeah.
there are options.
To boost your savings as you get closer to retirement.
Exactly.
Now, beyond these kind of headline-grabbing changes,
Right.
the IRS notice also mentions a few other adjustments that are worth highlighting.
Okay, like what?
Well, like the definition of a highly compensated employee.
Okay.
The threshold is increasing to $160,000.
And what does that mean for retirement planning?
Well, this is an important distinction because it affects certain plan rules and regulations.
Yeah.
So, for example, if you're considered a highly compensated employee, there might be limitations on how much you can contribute to certain plans
Right.
compared to other employees.
I see.
So this change means fewer people will fall under this category.
So someone making under $160,000 in 2025
Right.
wouldn't be considered highly compensated.
Exactly.
Okay.
This threshold really plays a role in ensuring fairness within retirement plans, particularly for those who might not have the same earning power as others.
Gotcha. Kind of a balancing act.
Yeah, that's a great way to put it.
Cool.
And we should also mention the adjustments to the income limits for deducting traditional IRA contributions.
Okay.
And for Roth IRA contributions,
Right.
those are important for a lot of people.
Definitely.
Yeah.
So let's paint a picture here.
Okay.
Imagine you're 55 years old
All right.
and you're currently maxing out your 401k contributions. With these new limits, how much more could you potentially save for retirement each year?
Okay, let's break it down.
Okay.
With the $1,000 increase in the overall contribution limit and the $7,500 catch-up contribution for those over 50,
Right?
you could potentially contribute an additional $8,500 per year.
Wow.
Now imagine that invested over time with the power of compounding.
That's a lot.
It is.
It really shows the power of even small changes.
Absolutely. And it's not just about the immediate increase.
Right.
It's about forming consistent saving habits that'll pay off in the long run.
For sure.
The earlier you start and the more you can contribute, the better off you'll be in the long run.
Absolutely. Yeah, it really is amazing to think about how those extra contributions add up, expert speaker.
Right.
Especially with that compounding growth. But we still have more to uncover, expert speaker.
Oh, we do.
Around with these new IRS guidelines. Expert speaker, yeah. We've talked a lot about 401k expert speaker, but there are other types of retirement plans out there, expert speaker. There are, each with their own set of rules and limits. Expert speaker, exactly. One of those is the simple plan expert speaker, right? Savings incentive match plan for employees, expert speaker. You got it. Often used by smaller businesses, expert speaker, yes. So what's changing for simple plans in 2025? Expert speaker. Well, the good news is the limit for salary reduction contributions. Okay, expert speaker, or what you might call elective contributions. Okay, expert speaker is going up to $16,500 expert speaker for simple retirement accounts and simple 401k plans. All right, expert speaker. And for certain simple accounts, there's a slightly higher limit. Okay, expert speaker, that stays at $17,600. Guess that if you're using a simple plan, you'll have a bit more room to save expert speaker. You will.
What about those catch-up contributions as expert speaker? Yes, for folks 50 over, expert speaker. Right. Any changes there? Expert speaker. For simple plans, the catch-up contribution limit stays at $3,500. Okay, expert speaker. And just like with the other plans, those between the ages of 60 and 63, right, expert speaker, have a specific catch-up limit of $5,250 for certain simple plans. Okay, so it seems like no matter what type of plan you have, expert speaker. Yeah. The IRS is trying to make it easier to save expert speaker. I think that's a fair assessment. Yeah, good expert speaker. They're also updating some of the language and definitions. Okay, expert speaker. That affects certain aspects of retirement plans. Like what? Expert speaker. Sure, let's take the term key employee. Okay, expert speaker, which comes up in the context of top-heavy plans. Okay, expert speaker. The threshold for what defines a key employee. Okay, expert speaker. For these plans is increasing from $220,000 to $230,000 in 2025. Top-heavy plans sound a bit intimidating. Expert speaker. They do. Can you break that down for us, expert speaker? Of course, top-heavy plans are essentially those where a significant portion of the plan's assets.
Hey, expert speaker are held by key employees like owners or high-ranking executives. I see expert speaker. These plans have special rules to ensure fairness for all employees. Okay, expert speaker, not just those at the top, right? Expert speaker. So increasing the threshold for what defines a key employee. Okay, expert speaker. They're potentially making these rules apply to a slightly smaller group of individuals. So safeguards to prevent imbalances. Expert speaker, exactly. Okay, expert speaker. And along similar lines, there's also an adjustment to the annual compensation limit. Okay, expert speaker. That affects various retirement plan calculations. Expert speaker. This limit is going up from $345,000 to $350,000 for 2025. So what does that mean practically? Expert speaker. It means any income you earn above $350,000 in 2025 won't be considered. Okay, expert speaker. When calculating things like your contributions or benefits, so a cap on what's factored in, expert speaker. Yes, there's a specific exception. Oh, expert speaker. For those who participate in certain government plans. Okay, expert speaker. That'll allow for cost of living adjustments. Gotcha, expert speaker.
For those folks, the annual compensation limit is actually going up. It is. Expert speaker, from $505,000 to $520,000. Wow, okay, so these adjustments sound like they're geared toward higher earners, expert speaker, indeed. And specialized situations, expert speaker. Now let's shift our focus. Okay, expert speaker, to a topic that's incredibly important for certain individuals. Okay, expert speaker, the provision for distributions to victims of domestic abuse. Okay, expert speaker, from eligible retirement plans. Yeah, that sounds like a crucial safety net, expert speaker. It is. For folks in vulnerable situations, expert speaker. Right. So what changes are being made to those provisions? Expert speaker, the limit on these distributions is increasing. It is. Expert speaker, from $10,000 to $10,300. Okay, expert speaker. It might seem like a small change. Yeah, expert speaker. But it can make a big difference. It can expert speaker. For someone trying to rebuild their life, right? Expert speaker. And achieve financial independence. Absolutely. Access to those funds can be so crucial in expert speaker. It can. For escaping a difficult situation. Expert speaker. Yeah. Okay, so we've covered a lot of ground here, expert speaker we have.
From contribution limits, expert speaker, to more specialized situations, expert speaker.
Yeah.
Right. We still have a couple of key areas to explore, expert speaker. We do. We haven't looked at the adjustments to IRA deduction limits, expert speaker. Right. And Roth IRA contribution limits, yet expert speaker. You're right. So let's explore how these adjustments might impact your retirement savings strategy, expert speaker. Let's do it. Okay, let's unpack these IRA limits. Super popular for retirement savings.
Yeah,
So understanding these changes is key.
it is.
Starting with traditional IRAs,
That's right.
the deductible amount is holding steady at $7,000.
That's right.
The additional catch-up contribution for those 50 and older also remains at $1,000.
Okay.
But I understand there are some changes to the income limits
There are.
for deducting traditional IRA contributions. Can you
Yeah.
walk us through those?
Of course.
Okay.
For those filing jointly
Uh-huh.
or as qualifying widowers,
Okay.
The phase-out range,
Right.
where your deduction starts to decrease,
Yeah.
is now between $126,000 and $246,000.
Okay.
That's up from $123,000 to $240,000 in 2024.
So for couples in that income range,
Right.
they might not be able to deduct the full amount
Exactly.
of their traditional IRA contribution.
That's right.
And for single filers or heads of household
Yeah.
who are actively participating in a retirement plan at work,
Right.
the phase-out range is now $79,000 to $89,000.
Up slightly from $77,000 to $87,000 in 2024.
Oh, wait.
Okay, a little more wiggle room there.
Yeah,
What about individuals who aren't active participants,
Right.
but whose spouses?
good question.
Yeah.
For those individuals, the deduction starts to phase out
Okay.
at a higher income level.
Yeah.
Between $236,000 and $246,000.
Okay.
That's up from $230,000 to $240,000 in 2024.
So the key takeaway here is to be mindful of those income limits.
definitely.
And how they affect your deductions.
Right.
As always, consult with a financial advisor
Always a good idea.
to determine the best strategy for you.
Absolutely.
All right, shifting gears to Roth IRAs.
Okay.
Any changes there?
Yes, there are adjustments to the income limits for contributing to a Roth IRA as well.
Okay.
For those filing jointly or as qualifying widowers,
Mm-hmm.
the phase-out begins at $236,000.
Right.
A slight bump up from $230,000 in 2024.
So if your income as a couple is above that threshold,
Right.
might not be eligible to contribute the full amount.
That's correct. And for those filing as single or head of household,
Yeah.
the phase-out range now starts at $150,000
Okay.
and goes up to $165,000,
Right.
compared to $146,000 to $161,000 in 2024.
Right.
Just a reminder, Roth IRA contributions
Yeah.
aren't tax deductible like traditional IRAs.
That's right.
However, the earnings grow tax-free,
That's a big plus.
and qualified withdrawals in retirement
yes,
are also tax-free.
it is a different approach to retirement savings.
It is.
Choosing between a traditional IRA and a Roth IRA really depends on your individual circumstances.
Yeah.
A financial advisor can really help you weigh the pros and cons of each.
For sure.
Yeah,
Well, we've covered a lot of ground today.
we have.
Defined benefit plans,
Mm-hmm.
defined contribution plans,
Catch-up contributions,
IRA limits.
Roth IRA limits.
Really a deep dive into retirement savings
A lot to take in.
and all the latest changes coming in 2025.
But a lot of good news in here.
There is.
A lot of opportunities to save for your future.
So as we wrap up, what's the most important message for our listeners?
Take advantage of these new limits.
Yeah.
Don't wait.
Don't wait.
Review your current retirement savings strategy. Consider increasing your contributions if you can, and explore all available options, including those valuable catch-up contributions.
And don't forget about those income limits.
Right.
They play a big role.
They do.
A little planning and awareness goes a long way
It does.
when it comes to maximizing your retirement savings.
Absolutely.
Every dollar you save today
Yeah,
could be worth even more tomorrow,
that's right.
especially with the power of compounding.
Time is your greatest asset
It is.
when it comes to saving for retirement.
Thank you for joining us on this deep dive.
Absolutely.
We hope this empowers you to make the most of these upcoming changes
Yes,
in 2025 and beyond.
that's right.
Remember, even small steps can make a huge difference
They can.
when it comes to achieving those retirement goals.
For sure.
So start planning
Start saving.
and take control of your financial future.
Today,